Good afternoon, everybody. My name is Daryl Martin, host of the Diagnostic Trading Hour Show, and I'm standing in today for Tommy O'Brien while he's out, getting a little bit of rest and relaxation there. Well, thank you for joining me today. Let's check out where the markets are at right now. We got the S&P is currently up a little over 7 points, about to close on down there. We got the Russell, it's down 3.5. NASDAQ up 10. The Dow is still up 76, pretty flat since the lunch hour. Looking on over at copper. Copper finished down 1%. We had gold is starting to move up now with the new session up 2 points. Silver is down just 0.5%. Natural gas is currently up about a 1/3%. We had oil had a nice run right there. It's up $1.36, over a 1% move in oil. Corn and soybeans also having greater than 1% moves, with corn up 4.75 and soybeans up 15 3/4. Checking out our Forex markets and where they're at, rolling on over. Now we got the pound dollar down here 6 pips since yesterday's settlement. Euro dollar down 45 pips. Euro pound down 22 with the dollar CAD down 12. Dollar franc is currently up 29 pips. Dollar yen up 6. Pound yen up 1. Euro yen up, or actually down 45. And the IC yen is down 5 pips on the day. All right, well, that gets you caught up on your current market forecast. We got a couple earnings announcements coming out tomorrow that you're going to want to be aware of. Looking on over, we got Google will be coming out. They usually have their conference call around 4:15 or so, but they have the wire. This is a really important thing. We start to learn how to, when you get into the earnings announcements, their wire comes out at 4 o'clock, like on the dot, maybe like 4 o'clock in a couple seconds. But I mean, time after time after time. Comes out at 4 o'clock. Sometimes it jets right there. Sometimes it takes it a couple minutes for the analyst to read it. After hours trading, all that. But maybe you don't do after hours trading on stocks. Maybe you don't trade stocks at all. Maybe you trade futures. So why would you care? Well, if you're trading indices, it's going to impact all of the indices, and obviously it can impact the NASDAQ the most, the NASDAQ 100, the NQ futures. Maybe you trade over on another market, like maybe you trade over on Nadex. You may not know what Nadex is. Nadex is the North American Derivatives Exchange. If you hop over on TFNN.com, you click on the right side banner there. There's a banner that says Nadex. Click on that. You can check it out. You can learn a lot more about them, such as the Why Nadex section. You don't have to have any stops. Trading without stops. Sounds crazy. Sounds mental. Mental stops, right? You don't have to have them. Your risk is capped. Now, it doesn't mean you have to take on the full risk. You can get out of the trade. But if you have a risk of $50 for one contract, maybe $500 for 10, $5,000 for 100, whatever, that could be your maximum risk. So the market could go against you 20 points. If it comes back, you can still be profitable on the trade. You can make money in flat markets. A lot of traders out there, a lot of you, I know myself, for over 5 years, I did really wide iron albatross, also known as iron condors, but wider than an iron condor. Well, imagine being able to do an iron condor every day, every hour. Okay? Well, that's where Nadex comes in. You can actually go in and with their spreads, with their binaries, you can trade flat markets. You can collect premium with 5 minutes left to go every single hour, just about every single hour of the day. I mean, 7 p.m., 8 p.m., 9 p.m. You can trade at night. Okay? You can go in, like 7, 8, 9, 10, 11, 12, 1, 2, 3. I mean, literally they're open from 6 o'clock p.m. to 5 o'clock p.m. And different markets, of course, have different hours, usually closing somewhere around when the pits close. But you got trading opportunities around the clock on volatile markets and flat markets. It's legal for U.S. residents. Your money stays inside the United States. It's traded on a regulated exchange, North American Derivative Exchange, regulated by the CFTC, same entity and body that regulates the CME. And so definitely, if you haven't checked it out, go over there and check it out. Your funds are also segregated. That means they are not the exchange's money. If there was anything to happen at the exchange, your money is set aside. It is not accessible by creditors. It is separated. It's just part of the regulations that go into the CFTCs and swaps and everything that go under the type of product that you're trading. They have 2 types of markets. One of them you may have heard of, one you may not have heard of. You may have heard of binary options, which sound like a game and gimmicky and all that other stuff. You know what? You're right. If you're looking overseas and you're checking out the overseas bucket shops where it's not really an exchange, it's somebody trading against you. They say they're regulated, but they're regulated by like a Better Business Bureau, which basically means they have no teeth and no ability to enforce much of anything. And basically, they charge you, a fee, and if you don't pay your fee, they're going to say something nasty about you. That's pretty much how those are regulated. They're not regulated by the CFTC. And they aren't really contracts. They're just at the moment, hey, let's buy, sell. It's over the counter. Okay, real contracts, defined strike prices, just like calls and puts like on CBOE, okay? And, but it's not just one strike. They have, up to 21 strikes per expiration. Depends upon the market. Some are 9, some are 15, some are 21. They got a whole level of strikes. They got spreads. Spreads are a product you may not have heard of all, but I guarantee you're very familiar with how they work. If you're familiar with options at all. Maybe you're familiar with weekly options, like Google has weekly options. The S&P has weekly options. Well, imagine having weekly options, and people love trading them on Fridays. Why would somebody want to trade an option on a Friday, on a weekly option? Well, because there's no time decay left. Okay, there's very, very little premium. And you're going to go to a delta of 1 in a heartbeat, because that delta has to be at 1 or 0 right before expiration. So it's going to move very fast. And it's going to cost you very little money, so that means you have less risk. Well, imagine having those Friday expiration options every day, meaning less than 24 hours on Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Imagine having them every couple hours where you only have like an hour or 30 minutes or 2 hours until expiration around the clock. Depending on what market you got them around the clock. Some are just during the day. Some are all day. But they got a ton of markets you can trade. Maybe you like to trade NASDAQ. Maybe you like to trade the S&P. Maybe you trade the Dow or the Russell. Maybe you like gold, silver, copper, natural gas, oil. Maybe you like soybeans or corn. So maybe you trade Forex markets, euro dollar, pound dollar, Aussie yen, euro yen, pound yen, euro pound, dollar franc, dollar CAD. All of those markets you can trade on Nadex. And they have a lot of education. They're always putting up education, so you can check that section out. They have their webinars, some videos. Check out their YouTube channel, youtube.com/Nadex, and you can learn a lot about it there. And maybe you just want to check this thing out and see how it works, okay? Well, how do you do that without having to put any money down? Well, what you do is hop on over to their website, and under trading, so after you've went to TFNN.com, you clicked on Nadex, you go over here, click on trading, demo trading account. Again, Nadex.com, go to demo trading account under the trading menu option. And you can get an immediate free access demo account, which will put $25,000 of funny money in that account for you. You're going to put in your username, your first name, your last name, your phone number, and your email address. Then click Apply for Demo. Check your email within a few seconds. You're going to have a login and a password, and you'll be able to hop in on that. Okay? So you'll definitely want to know how to do that, how to take care of it. And then why am I bringing this up? Why would you care about trading on this other exchange? Well, like I said, you want defined risk. Maybe you're sick of getting stopped out of trades only to see the market go back in your favor. Maybe you'd like to collect premium daily instead of weekly or monthly. Maybe you want to hedge your futures or Forex trades. Think about it. If you can get basically calls and puts, okay, which is they're very similar in their pricing model. These are the same Black-Scholes model. I've compared them on Fridays before, side by side, and show that S&P E-mini options, like calls or puts, are the exact same price as Nadex S&P 500 or US 500, what they call them, but mirroring the S&P 500 E-mini futures options, exact same price, okay, like right on par with each other. Well, if you have options that expire in the next couple hours or the current day, you can go in and put on a position to buy, say the S&P or the Russell or gold or whatever, and put on an extremely cheap hedge. You can have a 1, maybe 2, 3-point risk at most, but with a 10-point stop loss, meaning that you can make up to, say, 9 points on the spread. You lose 10 points on the future, you're only down 1 point. So you can have like a 1-point risk with a 10-point stop loss. $50 risk could move $500 against you. You're only down a net between your two accounts, $50. So it is one of my favorite strategies. I call it the ultimate hedge strategy. And we'll talk about that and a couple other things. We'll also talk about how you can use Nadex to trade the Google report tomorrow. Stay right here. We'll be right back after this break.
The path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, welcome on back here to the Diagnostic Trading Hour. So let's talk to you about how to get that demo account set up with Nadex. And this is a good time to do it because one of my favorite trades every single quarter, we're going to talk about it a little bit tomorrow on the show, on the Diagnostic Trading Hour that I host from 1 to 2 each and every day here on TFNN. But one of my favorite trades is coming up, and that is Google earnings. When Google earnings comes out, the market usually, now, obviously about 1 in 8 or so seems like to not have that big of a move. But usually you seem to see a nice big move on Google, and along with that, a nice big move on NASDAQ. And so what I'll do is I'll go in and I will pull up my scanner. And I have a scanner that I made that ties in directly to the Nadex exchange. I didn't really make it. I paid some programmers to make it for me. But I needed this for my own trades. And so I'll go in here, and let me show it to you. By the way, if you want to check out and get free access to it, you can check it out right over here on the homepage of TFNN under Diagnostic Box Spread Analyzer. But once you get free access to that, there's a whole video section, shows you how to trade Nadex, how to get started, who are they, how does their platform work, and how do binaries work, how do spreads work, all that fun stuff. But also I'll go in here and I'll go, I want to choose a market. So I would choose, say, the NASDAQ market. And I'll choose one that's going to expire in a short period of time. They have some binaries coming up for expiration here at 5 o'clock. So let's just say I chose one of those for fun. I'll just say $yen. And then I'll scroll down. I'll look at the contracts that are available. And these are all the ones on $yen. They're going to expire right here in the next 39 minutes. Well, sometimes I get this trade as early as around 1, which you'll find out if I get in on the show. Sometimes I get into it maybe 30 minutes before the announcement comes out. Not the press conference. That'll come out, like 4:15, 4:30, but the actual wire release at 4 o'clock. And what I'm doing is I'm buying a binary above and selling a binary below. This is one of the very few times I ever use binaries for breakout trades. And what happens is I'll usually layer them up. There'll be a couple different prices usually. And so if I put up $66 on a trade to buy, that means my risk, if I buy it for $6, is only $6. Okay? And if I sell a binary for $94, since the maximum value in a binary contract is $100, then it can go from 94 up to 100. So my risk is only $6 on the sell side. So I could buy one for 6 and sell one for 6. So I'll do my first level, and when it hits that strike, I'll get out and take a profit. And usually it's a very close strike. It's very easy. It's very highly plausible that we're going to hit that first profit. Maybe hit the second profit or the third profit. If we hit that first profit, then I'll get out at what I usually get out at $43 on the buy. So I'll buy, say, at 6 or 10 or whatever it is. I'll get out at $43. I'll sell the other one, say, at 94. I'll buy back at 57. Where does that whole 40? What do you mean you buy at 6 and sell at 43? And imagine a stock that went from $6 to $40 in 15 minutes. Would you like to trade something that moves that fast? Yeah. Okay. So, lowest it can go is 6 to 0, and you're still in the trade until it expires, so it could go back up. Well, it can actually go up to all the way to 100. And that does happen, like, every day, actually. Every hour. Binaries go up to 100. But what I do to keep it safe, because it has to expire above the strike I bought. Okay? So whatever price level, if like this is US yen at the moment, 100.77, have to expire above 100.77 in order for that trade to be profitable. Or below 100.67 for the one I sold to be profitable. So the sold one is an at or below, the bought one's an at or above type thing. And where does the 43.57 rule come from? Well, if the market runs up and it's at a strike, so if the strike is $100.77, is that 101.77? If that's the price on the US yen, and the US yen rose up to 100.77, let's see, right now it's quoting at right about 100.71. So we're only talking like 4 ticks, okay? So if the US yen would move up 4 ticks, then that contract would be worth $50. Why? Why would a binary contract be worth $50 if the underlying market was at the exact same price as the strike? Because a binary is a number of probability, just like a delta is a probability of expiring, not being profitable, but probability of expiring in the money. So as of 5 o'clock, if it costs $6, they're saying there's basically a 6% chance that the US yen will still be above 101.77, or will get to not will get to be above, but will stay above in the next 35 minutes. So they're expecting the market to stay very, very flat. Okay? And so you put that order on for $6. So let's say we go in right here, and just for fun, it's $6. And I'll just put on one simple contract. And now we bought the contract for $6. If the US yen were to move up to 101.77, there's a 50-50 probability it'll still be there as of expiration. It doesn't matter if there's 30 minutes or 3 hours or 3 days. There's a 50-50. It'll be at that price, at 101.77. If it's at 101.77, there's a 50-50. It'll still be at 101.77 because it could move up. It could move down. Since the binary is a reflection of probability, then what that tells me is I can use that number, okay, to take my profit. Well, why does that matter? Well, because what I'll do is I'll layer it in. And you're probably not going to be 6. It's probably like $10, okay? So if I buy for 10 and I sell for 10, I'm risking 20. If it moves up to, say, 43, I make $23 in net profit. I lost 10 on the one I sold, and I made 33 on the one I bought. So I made $23. And what I do is I use all that money I make on that really high probability close one, and I put it into a further out one that's really cheap, like $6. And then depending on how the market moves, I may take off half of that when it moves up to 43. I may take off, the other half, like maybe 25% of it when it moves up to, like, say, 70. And I may literally hold on to the rest of it until about $95. And, I've had many a trade go in and expire in the money on those outer ones, right there, just barely expire in the money off of this Google trade. And I'll go down and I'll do a strangle on it. I usually use straddles on spreads, but I'll usually use strangles on binaries right here. All right, we got Caleb from East Texas calling in about futures. How you doing?
I'm doing good. How are you, Daryl?
Hey, man, I'm doing great.
Okay, I've got a question about futures. I'm trying to pick out a broker that I can go with, and I'm comparing a few of them, but I'm confused as to what is cash hours and what is open to close.
Okay, there's a couple different, are you asking about, like, margin or?
Yeah, I'm trying to find out margin.
Okay, yeah, because different brokers have different policies. Like a Thinkorswim, I think they do somewhere around 25% of the initial margin. So let's say initial margin's, $4,000, okay, just as an instance. Then they'll allow you during the cash hours, which is 9:30 a.m. to 4 p.m., okay? So from 9:30 to 4, they'll allow you to put up, like, say, $1,000 for that as margin on the future. But if you want to trade at night, you're going to put up the full initial margin. If you stay right there, I'll go over it more when we get back.
Okay.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Tommy O'Brien Show. I'm your host, Daryl Martin, filling in for Tommy O'Brien today. We got Caleb on the air, and he's just calling in asking about how the open-to-close hours work and how the cash-only margin works. I was filling him on, there's different brokers that you can choose from, and they have different rules. The exchange sets the initial margin on contracts. So if you hold a contract past the close, then every broker has the exact same margins. And the exchange can change those margins whenever they want to. Okay? They leave it up to the broker to set day trading margins and what rules they want to use. Some are more aggressive. Some are more conservative. So like interactive brokers, you know, that I want to say they're only cash hours only on their futures margins between 9:30 and 4. They give you like a 25% of whatever the initial margin is. So if the initial margin is $4,000, then they have you put up $1,000. You have some more aggressive brokers like AMP Futures. That's who I use. And they will give you that discounted margin, but actually even less. I think they're $400 actually margin on the S&P E-mini futures. and they'll give you that around the clock, basically as soon as the market opens back up to all the way to when it closes. So if you want to use it at night, early morning hours, pre-cash, things like that, then you actually still get access to that day trading margin. You just have to make sure it's closed like 5 minutes before the closing bell, and then you can reopen the position. What are some of the brokers you're looking at, Caleb?
Well, I'm looking at AMP and Ninja Trader and Interactive Broker.
So a couple of those. Okay. Yeah, so if you're looking at Ninja, they have a lot of different ones. They plug into, I want to say, like 6 different brokers now. And great platform. You see me using it all the time on the show if you catch the Diagnostic Trading Hour there. And eSignal is another platform. I'm not sure if you're aware of it. It's one it's worth checking out. They plug actually into 50 different brokers. And so they're the TFNN. If you're a TFNN or if you're a eSignal subscriber, you actually now get TFNN inside the eSignal platform. It broadcasts live inside the eSignal platform. And I just actually found the page. It's eSignal.com/partners and then /broker-partners. But you can go in there and you can see all the brokers. They actually have AMP. And let's see here. They have Interactive Brokers and TD Ameritrade. So, they have all the same ones there, all the big ones. But they got a lot of others like Transact and RJ and, et cetera. They got equities, futures, options, forex. So a wide variety. So whether you're doing eSignal or Ninja, I love using platforms myself that allow for multiple broker access so you can always find the best rate. So I'll get my platform direct, and then I'll go over and I'll find the broker that I want to use. And if I ever want to change brokers, if I don't like my broker, I don't have to go to a new platform. I just plug in a new login ID. But does that help answer your question on the between cash and open to close?
Yeah, so cash is usually just from 9:30 to 4?
Exactly, 9:30 to 4 Eastern Time. And that means that's when you get the day trading margin break, if the broker offers one. And again, that varies. I get maybe $400 at one and maybe $1,000 at another.
Right. Okay.
So it's sort of fun figuring all that.
Thanks so much for answering my call.
Hey, no problem, man. Thanks for calling in. Feel free to anytime.
Okay, have a good day.
Hey, you too. Awesome. So, it's sort of fun trying to navigate when you're first getting into futures. I remember diving into that. You're seeing all these different rates and commissions and margins. And, you want one that's clean, that's simple. There's multiple brokerages out there. AMP, IB, TD Ameritrade, Thinkorswim, Myris Futures, which is now Ninja Trader Brokerage. They just got bought out by Ninja Trader Brokerage, and they got some clean, nice flat rates as well. So just easy rates there. But, there's a lot of choices on there. And I wonder if they've updated that over on their site. Let's see here. On eSignal site right now. And the acquisition just happened. And it doesn't really affect anybody at Myris. It just, they went in and they lowered a lot of the rates and did some pretty cool stuff. So it looks like they got to do a couple updates on it. But very cool that they're plugging into that platform still. And eSignal, one of the cool things I like about it, my favorite thing about the eSignal platform while we're on the topic is some of you may or may not know about this, but over on CME, let me just sort of show you an example. If you want to learn a way to trade with very low margin and usually pretty low risk depending upon which one you're doing, let's go in, let's check out their website's having a heart attack. There we go. So I'm over on CME. I'm going to go over to say it's like crude oil futures. Okay, these are a little bit more volatile, but actually, you know what? I'll show you one that's like this insanely low. Okay, so I'm going to go over here to soybeans, and they have all their information, their contract specs, and their margins. So if I go to margins, and I got soybean futures, that's just outright the maintenance of the initial margin is 3,300, the maintenance margin is 3,000. I want to say AMP is 500 or 1,000, probably $500. Over there, but also you have what's called intra-market spreads and inter-market spreads. So if we click on the intras, what it'll do is it'll show you the different contract months. So if you go in and you're going in and buying like the August and selling the September, buying the August, selling the September, buying the November, etc. There's all these different ways to do them, but your initial margin is 605. Your maintenance is 550. That's with 2 futures. That's because that's about the most they expect them to spread apart. The further out you get, the wider that can get. But you're talking trading futures with $500 margin, and that's holding it overnight. That's not just I get in the position, day trade closing it. That's actually holding the position overnight. It turns it into a intra-market spread, inter. Yeah, it is intra. It gets so confusing. Intra is the same market, soybeans versus soybeans. Inter market would be going in and like a soybean crush combo with soybean futures, soybean meal. So you could be combining in like meal, crush, and futures, and they'll do all different ones, and they can be. The margins are pretty spectacular the more you look into it. But one of my favorite trades to do. Now they take a while, so it sort of ties up your money a little bit longer than I like. But is seasonal based intra-market spreads. And often, many of them, if you got to know what you're doing. You don't just take like what some stat engine spits out. But if you go in, you do the homework, and that you do have to do the homework. You find the ones that have not only a high probability, but actually have liquidity. Because there'll be a lot of these engines, they'll spit out stuff for like, 2015 versus 2016, and stuff like that. That, I mean, 2 contracts are traded on. Well, it doesn't matter how good it is, or their dates will be like past the last trade date. Well, that's obviously useless to you because you need to be out of that trade well before then, or else you're going to be stuck in it, or have to pay to get it closed out, or end up really having to pay on the bid-ask spread with that low demand. And so, anyways, but the place to trade them is eSignal. Why do I like eSignal so much on trading intermarket spreads? Because it is the only platform I know of, and I've tried a lot of platforms over the years, where you can actually plot bars and candles on spreads. Usually when you plot, you just get a line chart. You get like today's, what is the closing price of soybeans August minus the closing price of, soybeans September. And you get that closing price. Because if you do choose a candle or you choose a bar, what it's doing is it's taking the highest price of soybeans August minus the highest price of soybeans September. Well, the problem is soybeans August may have had a high at 9 a.m. and soybeans September may have had a high at 2 p.m. And so it's not real. That spread wasn't really available. There was hours of difference. eSignal goes in intra-bar, and at the exact same time, it finds what was the high at the same time as the high versus the high. So what is the highest that spread has been during the day at 9, 10, 11, 12, 1, 2, all hours throughout the day, all minutes throughout the day. What is the highest soybean August versus soybean futures has been? What's the lowest it's been? So not only can you get that open and close, but you can actually get that high and low, and now you can actually bring in your candlestick patterns and your analysis and indicators that require having, highs and lows and things like that on them. You can actually use them and use all the trading knowledge you normally are used to, but over on spreads with lower margin and with often great probability as long as you, put in a little bit of homework on them. So just a pretty cool feature. That's, like I said, that's personally my favorite feature. Well, maybe my second favorite feature. My favorite feature is probably that TFNN's now broadcasting inside of it. But but as far as trading goes, and that application side, I love the fact that they are the only one. I wish others provided it, but I love that they provide that. Hopping back over to our example over here, and like I said, get yourself going so you can get inside this trade and check it out and see how it works. And what you want to do is, like I said, sign up for that demo, and then you'll log into your demo account. Okay, like I said, they'll give you $25,000 of funny money to play with, and you can build it up as big as you can get it there. And when you get in there, then tomorrow, what you'll do is you'll, log in, and I suggest that you hop on over and subscribe to the free trial over at TFNN.com, just on the front page there. Scroll on down a little bit and click on the Diagnostic Box Spread Analyzer and follow along with me on the show tomorrow on the Diagnostic Trading Hour. We'll talk a little bit more about how to set it up when we get back right after this break.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Backtech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Alrighty, folks, welcome back here. I'm your host, Daryl Martin, right here on the Diagnostic Trading Hour. All right, so we're checking out a few things right now. And what I'm doing is I'm talking about tomorrow. We got the Google earnings release coming out at 4 o'clock Eastern Time and how to trade that. And so what I'm going to do is I'm going to go and I'm going to select on the scanner. I'm going to hop in here. I'm going to check the U.S. Tech 100. I'm just going to get rid of my filter so I can see everything. So I'll hit, live or demo. If you're brand new, probably want a demo. And I'll reset all my filters. I'll choose U.S. Tech 100. I'll scroll down. I'll see what's going to be expiring at 4:15. Make sure you get the 4:15s. If you go in and get the 4 o'clock ones, well, the news hasn't happened yet. Okay? And then I'll usually layer in my trade where I'll go in and I'll put in, a closer, basically strangle is what it is. I'm buying a upper strike, selling a lower strike. I'll close out that strike if the market moves to that price, which usually it does on that close one. And then what I'll do is I'll do one that's just one strike wider, maybe 2 strikes wider, depends on the pricing. Maybe I'll literally layer them up, 4 up and 4 down. So, but I'll basically try to put in as many as I can, as cheap as I can, as the market's oscillating back and forth, and I'll put those on. And my whole goal is to make all the risk on all the other strikes I put on that first one. So if I'm going to make, $20, now I may do 100 contracts. So I may go in and do $20 times 100. That's, a couple $1,000. Then I'll put that couple $1,000 up on the other contracts. Now on those contracts, if I make a couple grand, I'm looking to make, a whole lot more than a couple grand. So, if I end up risking, say, we'll just say $10 on both sides combined, and I'm looking to get out of, at say 50, that means I'm looking to look 40 on that $20 per, that I'm putting it in there. Then I will, hopefully turn that $2,000 profit on the first one. My goal is to take all that, reinvest it, and turn that into an additional $4,000 profit, which would walk away with like $6 grand. So I want to go in, and that's how I'm going to try to put the trade together. Is I want to have the first one, take the profits, put that into additional layers up and down. If we get a nice big move, then we can make a whole lot. If we get even just a little bit of a move, as long as we can hit that first strike, then we can still potentially be profitable on that trade. So it's a very low risk trade, and I want to say one time we didn't get to do it because that Google earnings release that came out early, wasn't supposed to come out. One time it hasn't worked, and the other times it's worked out sometimes like massively beautifully. Sometimes we just had a decent profit. So and sometimes we have to get in early because just the way the market's moving, if we don't get in, there may not be any strikes. So that's what we'll be looking for about 1 o'clock to see where is the market with Google coming out and what kind of expectations do they got going on, because this is really going to set a tone for the market. Now, what other news, what other earnings are coming out? Well, right after that comes out, right after Google comes out at 4 o'clock, IBM, which is in the Dow, it's not in the NASDAQ, but it's still going to impact, the NASDAQ. IBM is going to be releasing at 4:10. Okay? So that'll come out and impact the Dow, Wall Street 30 on Nadex. And so that's another potential trade. But you only got 5 minutes for that thing to go off. So that's why I really prefer the NASDAQ trade out of all of them. But you could look at the IBM one as well, but you only have 5. You don't have 15 minutes from the release of the Wire report to the expiration of 4:15, which could make it really cheap, but also could make it really expensive. Now, when I talk about really expensive, one of the things I'm often going into is the fact of implied volatility. And let me show you an example over here. I was talking to a trader the other day, and she wanted me to help her understand implied volatility. And so what I did is I put on, like, say, a gold contract, and let's just look at where gold's at right now. Okay, so let me pull up we'll pull up a gold chart. We'll throw gold on there right now. And so those who listen out there in radio, we're looking at the gold futures contract, and it's currently priced at $12.99. So I'm going to put this at $12.99, and the strike is at $12.99. So if you bought an at-the-money strike, if your implied volatility was 15%, it says, hey, it'd be worth $1.51. Well, here's what's going to happen tomorrow. NASDAQ's going to be floating along. The U.S. Tech 100 spreads and, binaries going to be floating along. But then they're going to get more expensive. Like, the market's not going to move at all, okay? And this is literally what could happen right here. You go in and let's say you bought the upper one for $1.51. You sold the lower one for $1.51, okay? Of risk. And all of a sudden, and this happened last time I was on air, you go in, and now you're up 50 cents on both of them. And the only thing that changed, notice the price did not change. The only thing that changed was the implied volatility. It went up. And it's going to go up as all of a sudden everybody starts hopping in and buying those contracts because Google's coming out. Knowing that release is about to come out, they're going to go up. And, they can go way up. Now, they'll also, let's say it comes out and it's sort of it's not a big move. Sometimes they can also drop way down and get what's called a volatility crush, and they can just as easily lose some of that move. And so that volatility is going to change basically how the numbers are moving around. You'll notice that Vega stays the same on it, but the implied volatility can move up and down. And literally, that's pretty much what a market maker does. They just go in, and from what I understand, they basically hit all the indices at one time. And they'll just go in and go, okay, well, I know it's at 15, but Google's about to come out. That's going to be like double the possible movement. Let's make it 30. And all of a sudden, boom, all of a sudden everything gets more expensive. And it's really cool when you're in the trade, and all of a sudden you're up on your bought contract and your sold contract, and the market hasn't even moved. Now, what you don't want to do is you don't want to be in there and get in when it's $3, right? So don't wait too long, or they're going to be way too expensive. And they'll fluctuate that up and down. They'll be like 15, and then a lot of buyers come in. Okay, they want to get rid of some of this stuff, so they're going to make it more attractive for sellers to come in so they can sell it to them. And so they'll raise that up to like 30. Sellers come in, they'll drop it back down to 20. Maybe it'll hit 15 for a little bit. Some more buyers come in, they bring it back up to 25, 20, and then like right before the release, it's 30. Release comes out, they're going to drop it down some. Okay? And they'll keep dropping it down until there's nothing there. And so you want to get in, you want to have those take profits set, you want to hop out. But that's just the implied volatility changing. And you can see over here, sort of if we put in the same thing, and this is looking at saying like having 2 hours to expiration. We could make it, where there's 60 minutes to expiration. And you can sort of see the Vega versus the underlying price. So if the underlying price sort of stays the same and moves there, we see the Vega move. And there's a lot of little pieces we can do to it to check out, Gamma and Vega and Theta and all that fun stuff. But I'll talk more about how is a binary price determined and what does it look like compared to something that you're probably very familiar with if you've ever traded options. Stay right there. We'll be right back after this break. Alrighty, folks, we'll come back here to the Tommy O'Brien Show. Tommy O'Brien's out right now, getting a little rest and relaxation. I'm standing in for him. This is Daryl Martin. I host the Diagnostic Trading Hour each day from 1 to 2, and I have the Bull Bear Binary Show that I co-host with Tommy each and every Friday from 10 to 11, where we go over various trades and even pull some live trades in the market as well. Right now, we've been going through on the first half of the Tommy O'Brien Show talking about the earnings reports coming out tomorrow. We got Google and we have IBM coming out as well. And talking about how can you take advantage of that? How can you trade that and not have to worry about what direction it's going to go? I mean, when Google comes out, Google usually moves big. When it moves big, NASDAQ moves big. Who knows what direction it's going to go? I don't know. I don't care. I just want it to move. And so I play both directions. I buy above and I sell below. If you ever want to know how to straddle futures or strangle futures, this is a way to do it with options. But not with options that have a ton of premium in them. And you can do as little as a $15 or $20 trade, or you can do 100 contracts and make it a $2,000 trade, or you can make it a $20,000 trade. Whatever you want to do, you can put as much as you want in there, or as little as you want into the trade. And we're talking about what are these weird binary contracts? And we're not talking about those overseas bucket shop bullcrap binaries. I'm talking about real exchange-based financial trading instruments that have a consistent pricing model. And to give you I can give you a couple different pricing models, but the simplest and easiest to see pricing model is a binary is essentially one thing. It is the delta of a call option. So to understand what does that mean, Well, delta is on a call option, when you buy an option, it's how much will the option change price for a 1-point move in the underlying. So if the NASDAQ moves 1 point and you have a delta of 50, then your call, and let's say it moved up, the NASDAQ moved up $1, and you bought a call option for $4, okay, then it would move up by a value of 50 cents in 1 point. That's what delta is. And it's just, how do you know how much an option is going to change in price when the underlying moves a certain distance? And so there's 5 Greeks. There's delta, gamma, vega, theta, rho. Okay, rho sort of non-existent right now with no interest. Theta, obviously if you're a buyer of the option, if you're a buyer of the premium, you want as little theta as possible, and that's a massive advantage of buying options with short-term expirations, such as same day, same hour, which you can do every day over on Nadex. And but a lot of people have a hard time understanding that whole price change on a binary option. And so to understand a binary options price change, the easiest way to grasp it is to understand a delta's price change. So if you understand, one, that a delta is simply the measurement of a regular call option's change in price if the market moves up or down by $1, then you're like, okay, so I get that. And if you calculate the delta of a call option expiring at the same time and the same strike as a binary strike in expiration, then the delta of that call option will be almost exactly the same price as the binary that has that same strike and same expiration. So essentially, you're trading delta. Some similarities here. Delta is always at 50 when the market is at the same price as the underlying. If you're watching over on Tiger TV or there inside eSignal, you're checking out Tiger TV, you can see I put in, having an underlying price of 36.22. It shows the at the money strike being the strike that is at the same price as the market is 36.22, and the delta is what? It's 50. The binary would also be 50. Now, it may have some bid-ask spread, making it like, say 47 by 53 or whatever, but the mid price is 50. A delta is 50 when the call option strike is at the strike is the same as the underlying price at that moment. A delta has to go to basically 1, or we could say 100, 1.00, or 0 at expiration. Either it's a in-the-money contract or it's an out-of-the-money contract at expiration. Well, a binary contract, the price is either going to be 100 or 0 at expiration. So if you sell it for $60 and it moves down in this below your strike and it becomes in the money, it's below the strike, or at or below the strike, then it'll be in the money, and the value, the binary price will be 0. So you sold for 60, you got it settled out at 0, that means you made 60, and since the maximum price of a delta is 100, maximum price of a binary is 100, then you basically put up $40 risk, so you got 60 back, and you got 40 back. So your payout is $100, but the actual binary expired at 0 because you got $60 in profit and you got $40 in risk back to you. So it's going to go between 0 and 100. Just like delta changes between entry and expiration, so does a binary change between entry and expiration. So if you bought 36.22, but the market went up, and let's say it moved up, we'll go in and just say 36.27. Okay? And now let's see, what is the 36.22? Now it's 68. So if you bought that binary for 50, now it'd be worth 68. What if it moved up 5 more points, up to 36.32? Well, you bought that 36.22 at 50, now it's at 83. You can get out of the trade. Vice versa. Let's say you go in and you sell the contract for $83. The delta's at 83, the binary's at 83 on the 36.22 strike. So you sold it for 83. And then the market moved down, okay? When the market was at 36.32, it moved down 10 points to 36.22. And now your 36.22's delta or binary price is at 50. So you were able to make, what is that, $23 on a $27 risk on the trade. Not too bad. Not a perfect one-to-one, but not too bad. Now, you have other ways you can trade also, such as you could go in and let's say the market is at 36.60. 17. Okay? And you what? I think it's going to stay either flat or move down. I really don't think the market's going to move up. I'm bearish. And so you could actually sell the 36.22 strike for $32. And if it stays flat, you'll make $32. Now you can do 100 contracts and make $3,200, all right? But just to give you a simplicity of you can actually trade this for very little money. But if it stays flat, you make $32. If it goes up, you could actually lose $68 on the trade. Okay? And wow, I don't like that risk reward. But I do like the fact that it can stay flat and I make 32. I like the fact that it can move down and I make 32. I like the fact that it can move up 5 points and I'd still make $32 as of expiration. Now let's say it does move up. You sold this 36.22 for $32, and it does move on up. The market moves up and it hits your strike at 36.22. Well, then you could actually get out of the contract at 50. So you can sell for 32. You can get out if the market moves up to your strike, get out at 50. That's an $18 risk on a $32 profit potential where the market can stay flat, move down, or even move 5 points against you, and you still make money. So 3 out of 4 scenarios, you make money. If it moves up more than 5 points, you got to hop out of that trade, and you take a smaller loss. That's how a binary price changes. Okay, so you got your in-the-money binaries, your out-of-the-money binaries, your at-the-money binaries. And you can also do strangles. You can go in and you can buy this one for 92 at the 36.07, and you can sell this one for 36.37. So for $8. So that's sort of where I was giving you the example of 6 and 6 earlier. So if you were going in and buying this one, we'll just highlight those green, and you were selling this one right here, and we'll highlight those red. Okay. Then you'd be buying it. Actually, I guess you'd be buying the 36.37, the one moving up. I got that a little bit backwards. But you'd be the one moving up for $8 risk, the one moving down for $8 risk. So you'd buy the one above at 36.37 for $8. You'd sell the one below at 36.07 for $8. You got a $16 risk. The thing moves to $50. Well, if you got $16 in, okay, and let's say you lose on one side because it moved up. Okay, so you lose on the sold one. So you lose $8. But it moves up, and you bought the other one for $8 risk also, and you got out of it for $43. Then you'd be looking at, let's see, 8, so you got 10, so 20, 30, 40, so $35. So you made $35, you lost 8 on one side, you netted out at a $28 profit on a $16 risk trade. That's what we're talking about doing tomorrow on the Google release. All right, stay right there. We'll be right back after this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, well, I'm back here to the Tommy O'Brien Show. I'm your host, Daryl Martin of the Diagnostic Trading Hour. Have a show here, but we got John Logan on the line. You there, John?
Hey, Daryl, how are you today?
Hey, man, I'm doing great. How are you doing?
Doing good. Love your show.
Thank you very much. Loving your product. Been checking it out. Got the TAS Signal box. You can check that out. For anybody who doesn't know, definitely hop on over to TFNN.com and check out the TAS Signal box. You also do a daily market profile video as well. Is that right?
Yeah, we do. I don't know, 10 to 15 markets every day, and we just try to get a heads up before the market opens on the usual suspects. People are always looking towards the golds, the S&Ps, the currency futures of the world, and I think it's it's a good kind of pre-market type analysis of getting people on the right page, hopefully, technically speaking, before the market opens, and then they've got some inflection points to lean on, hopefully. So
awesome. So basically, you're focusing mainly on the futures markets, indices, commodities, forex pairs, etc., all in the futures markets, and then basically the idea is use the profile report in the morning to give you an idea of like sort of where to see some resistance areas and inflection points in the market for buy and sell orders. And
which really, really makes me interested in your product, actually, because I got a couple of questions for you, because I can answer the question a little bit better if I know on the Nadex and what you're doing. Do they pretty much offer options and spreads on Nadex on every instrument out there? Is it like a select group like the S&P 100 when it comes to stocks, or what?
It is a select group, but they have quite a bit. So you can go. They have S&P, Dow. They have the NASDAQ, the Russell. They have 10 different FX pairs. So most of your major FX futures you can do it on. And then they also have gold, silver, copper, corn, soybeans, natural gas, and oil. So quite a variety.
I heard you talking about Google. Are they doing them on individual equity instruments now, or not?
No, they don't do them on the equity instruments mainly because they're regulated by the CFTC, which is the futures side. And so right now there isn't any U.S. regulated exchange that has them on stocks. But what I do is, since Google moves NASDAQ so much, I use NASDAQ to trade the Google earnings releases.
Right.
So because when Google moves big, NASDAQ moves big, and so I'll use the contracts over on Nadex to trade that.
Well, that's cool, because what I was going to say is, as we kind of give that overview, we also do a lot of stock work. We have the S&P 100 in the signal box where people can kind of get the uncle points or whatever when they're right or wrong. And I was wondering, like some of these inflection points are probably extremely useful when it comes to doing some things that you're doing with Nadex, because it kind of allows them to, have an area of possible high probability where the instrument may move away from or power through, which would allow them some on the golds and the S&Ps of the world, like you're trading, just to kind of get some, be patient until it gets to a certain area to try to pick a battle. And
definitely, but what we ought to do is I ought to bring you onto my show one day, and then what we could do is we could bring up the TAS signal box, and I can bring up Nadex. And we could walk through sort of maybe putting some trades together with the two pieces. Yeah,
and the signal box, we can kind of spill that over into the charts, which is how that, what the outputs of that signal box come from, is the levels, so to speak, on the charts. I mean, what we did is, take the original market profile, turn it into a pretty objective environment. It was really subjective. I was in the border trade for a while, and Pete Stottlemyre, who kind of invented this way to organize data. He was a real he's a smart guy, but he always kind of let the door open to be wrong. And what we've done is, I think, created a really pretty good rules-based environment, which would spill into your box spread analyzers. I've been watching your stuff for a while. I'm blown away what you've put together there, and I think the key really is finding out areas to really be patient and wait when it comes to your product. And this thing that we have may allow you to, kind of be patient and wait until the market comes to you into these areas for explosion or contraction or whatever.
No, I'd love to do that and put that together. So the key I tell people all the time, I was like, patience, 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 and you get that right point, and then you strike. And if you use depending upon the strategy you're using, you don't even have to use a stop. So you don't even have to have that uncle point. But you need to know that entry point so you don't end up burning the time. Because on an option, you only have so much time. So you really want to know those key inflection points, especially if you're doing like a sort of a higher profitability, lower probability trade, like a little bit out of the money. But if you can find those key inflection points where it's going to pop, then that's a great place to, a good combination of putting the two together. I see we got Bill over in the Tiger Den right now, and he's like, combining, the stops and the scanner with the TAS breakouts and all that stuff, putting those pieces together is a very, very good combination. So we're going to have to see that together ourselves. So we'll have to get together on it.
Let's set a time. I'll send you an email, because I think this might be a really cool thing to look at collectively. I'm psyched about it already.
Well, I'm always looking for different and better ways to trade Nadex. I mean, I trade futures, I trade Forex, I trade some options. I actually started trading on options, and I don't know, like over a decade ago when I quit my day job. And then I got into Forex and futures, and not as big into stocks, just because I like the leverage of the other instruments. But you sort of get all the pieces together. You get that leverage in your favor, but not against you, and you get that massive benefit of an option with having the defined risk. And I still get to trade all the major markets by trading futures and Forex over on Nadex. So it's a good combination, and any tool I can use that helps me with that, I'm all about.
Yeah, I mean, I hear what you're saying. I mean, it seems like ultimately anybody who trades, at some point in time ends up going directly almost all into the futures market. Seems like that's kind of where me and you are at. But there's a lot of interesting things, and there's a lot to choose. Like a scanner or kind of a profiler, I guess, is what we have. It allows you to kind of not. You come in, you look at the S&Ps, you look at the NASDAQ, like I'm sure you do and I do every day. Gold. It kind of broadens your scope of assessment, I guess, or whatever, because you get to kind of look at quite a few more instruments at the same time, and you get a lot more ripe opportunities exactly how you want them, because a scanner or a profile or whatever will just kind of like, blah, here they are, and we don't have to completely focus on the same markets every day.
That can definitely be a challenge, because if you're just focusing on one market, I say this all the time, you never know whether it's going to be the ags or the metals or the energies or the indices or the FX. Something's going to be moving today. You just don't know what it is. So having a scanner tool like what your profile tool to help you say, hey, start paying attention to this. And even for futures traders out there, they're like, I don't know about Nadex or whatever. You talked about, you had the inflection point where you expect to move, and you had the uncle point, where you're like, hey, you're wrong, just get out and move on next trade. Well, my favorite strategy on Nadex is actually using futures and using Nadex together. And so I'll go in and I'll buy, the Russell, and then I'll sell a future for maybe, I'll have 2 points risk, which maybe that's where your uncle point is. But I don't have to get out of the trade. I can leave the spread on, and maybe it goes down and hits that, and maybe it pops on back up, and I can still be profitable on the trade. So it allows you to build a trade without having that stop loss, but still getting all the benefit of pure futures, too.
Man, you're speaking my language, because my favorite trade, and I did not know about Nadex until I started listening to you, is to put on those like short futures and in-the-money calls on the regular market, but you don't have to do that to just kind of have the intrinsic value you're paying for if you use those Nadex. Awesome.
Stay right there. We'll be right back after the break. I want to talk a little bit more about it.
Okay.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, John, you there?
Yeah. Looking forward to talking to you again.
It's like, come on, commercials, get them over. But yeah, what I was talking about was the ultimate hedge strategy I do. I'll go in, and I just tried to find one of my slides from an example. It's a little outdated, but basically I went and I sold the pound dollar, and so it could be 6B or whatever, and then I bought the equivalent number of spreads. In this case, would have been like 10 spreads for one lot on Forex, at just FX spot, and the risk is the difference between the two. So if I sold at 56.85 and I bought at 57.10, I mean that's 35, tick risk. It'd be 350 if you're doing 100,000 units of currency. Mm-hmm. But I had the ability, my stop would have been much larger than that. If you can see up here, I mean it moved way up, would have been resulted in about a $600 loss on the trade. Mm-hmm. But the trade moved way up against me and then came back down. It'll be profitable. Ended up making 960 on the trade. So then
you're short the euro in the midst of all this option spread, right?
Yeah, the pound on this one. Yeah, exactly.
Pound, sorry, the pound. Yeah,
so you're right. Okay. Exactly. I go in and I see this sell, whole trend line here, and it's going against it, comes back up against it. I'm like, okay, I'm gonna go ahead and go short this time. I go short, it's going down. I'm getting all excited, right?
Right.
Pop right against me, and I'm, you're probably hitting uncle right here. All right.
Yep.
And so you're out of the trade, money lost. Except for if you have a spread on, the spread's making tick for tick. Once you get to the price where you bought it at, it's making tick for tick to cover you. And so you're not even worried about it anymore. It can go all the way up to 59.50. I mean, you got a 200, like 40, 50, whatever point stop loss there, where it could run on up, and you only lose, a few $100s on the trade, and then it comes back down. You're actually able to, capture $960 because you were able to stay in. So if we can combine, maybe a combination of the task signal box on when to get in, and then I even see one of our users again over in the Tiger Den, talking about how they use the deviation levels, because I have inflection points, but they're more of like when to trail stops, okay? Right. And yours are more of like that inflection point. So now mine's when to trail stops because I think the market's not going to move any further. Yours is like when it gets here, I think it's going to pop one way or the other. And we put those deviation levels together with your signal box and the scanner and Nadex, and we might have a pretty killer combination there.
Yeah, I mean I'm really thinking hard right now. So. Can I ask you some questions about Nadex in general and about how you're using them, obviously?
Yeah.
These can be basically day options, right?
They're all day options. Yeah, so think of having Friday expiration options every day and every hour.
Okay, so they're expiring every Friday.
No, they're expiring every day.
Every day, okay. But do they have weeklies on those either, or at all? Or no?
They do have weeklies on the binaries, not on the spreads.
Okay.
So,
okay.
I mean, if you wanted a weekly spread, you just go in and, you have to trade to larger size, but you could just go over and trade on CME.
Well, my next question is, I'm assuming these are separate accounts. You hold your Nadex stuff in and your future stuff in, right?
That's right. So you would need to have the drawdown capital to take a hit over in one account. Your net would be the same, but you may be down at $1,000 in one and up 700 in the other, so you're only down 300. But yeah, you need to have the money in both accounts. Yeah.
Right. Can the same broker see those two? I mean, are those two different?
Nah, there's no margin offset. Yeah, because Nadex is an exchange, and you're a direct member of the exchange.
Okay.
So as of yet, that's not possible. When the FCMs come on, it might be, but it'd have to be a broker-based exchange break. And the one thing is, I know on Nadex, both parties have to put up the full risk capital no matter what. So I don't think there'll even be an exchange break with that in there. But because it's two separate exchanges, but I
apologize for asking these elementary questions.
No, they're great questions because trust me, every question you're asking, I asked to begin with.
I was thinking your users might benefit from my stupidity too. So.
It's not stupidity at all. Seriously, I mean, I've only been trading Nadex for a few years. I've been trading for over a decade, but only Nadex for a few years. And so when I first met them, I spent like 2 hours in their booth. We were both at a trade show, and I was speaking on some stuff and. They were speaking, and my daughter actually is the reason I got to know them because she went over and she wasn't even taller than their booth. She had to pull up over the booth, and they're like, do you trade? And she's like, yeah, I trade. They're like, really? They're like, what do you trade? She's like, I trade the spoos. She's using like floor trader vernacular. And they're like, seriously, why do you trade? She's like, to compound my money. Why else? And so that sort of kicked that off, and then they're like, who's your dad? And they came in, they found me, and we started talking, and I was like, I don't know what this is. I was really leery to begin with. And I literally pounded them for like 2.5 hours, and at the end of it, I was more excited than I've been about any product ever that I've ever traded. And the first strategy I came up with was this ultimate hedge strategy because I was already trading futures and forex, and I knew options. So I'm like, if I tie that together, now I can do it with less risk. And since then, I've probably developed I have about 65 strategies I've made. That's now a lot of them I don't use that often. There's probably maybe half a dozen I use a lot, but that's my favorite strategy, just because I can trade I can get all the benefits of futures, but without all the drawdown,
all the headaches of futures.
Yeah, the heartbeat. You get in and it ticks against you, and you're like, oh no, do I have to get out of my trade? Am I going to go the other direction? Am I going to get in again? All that. Should I move my stop? Which I know I shouldn't, but should I? And all those little psychological games you play in your head, like they go away as soon as you put that spread on.
Yeah, and it's successful trading is supposed to be boring and not exciting, so I like that.
And it makes it very boring, which is awesome.
Good. Boring is good. Boring is very good.
Yeah.
I was kind of listening to how your argument on these things unfolded a couple of times, and I was like, damn, this is really probably the way to go because I hate getting stopped out just like everybody else, but when price action comes into these profiles we have, I'm like, man, I haven't got my head taken off trying to short the S&Ps this year, but it's been nerve-wracking, at times trying to, prepare for some biased short move in the S&Ps. They're just been a bid in this thing for 3 years,
I know, and it jacks with your head, right? Because it goes up.
Oh, God,
and you're like, okay, I'm going to be disciplined. I'm going to take my stop. And then, the worst thing that happens is you do, and then this happens right after it. If you're looking at the screen out there, what I'm showing is like getting in over here like 58.60 or whatever, or 56.80, and the market flies up to like 57.60. And then right after you get stopped out, ticks after you get stopped out, it flies all the way down to 5,600. Yeah. You have this massive profit, and you're like, oh, man. You're like, if I would have just stayed in, I wouldn't have taken the loss, and I would have got all that profit. Or I didn't get back in because I was too nervous after the hit. I wasn't sure if I should do it twice. Or maybe you went long, and then it goes against you, and you're like, man, no matter what I do, it seems to be wrong. And so it's all those games that you play that jack up your next trade go away if you start hedging your futures with an option. That's all it is. It's no different than buying Google and buying a put.
We're going to get along great. This is like music to my ears. For people out there who are listening to the show and they're just getting in the marketplace, they can save themselves a lot of trying times by utilizing exactly what you're talking about. And combined possibly with some of the things that we have, you even get more patient. I mean, one of the best things in the world, best trades that I've ever had is when you literally put something on, put on the option hedge, and walk away. Do not get involved with it anymore, because you've made a decision. You've waited until you pick the battle at the right place, so to speak. And, if that volatility comes, especially with these Nadex binary like you're talking about, who cares if you're wrong? I mean, it flies in your face. You don't have to worry about that intraday noise getting stopped out if you're right. And then you can kind of, you've weathered the storm. I'm just kind of possibly speaking for you now. You've weathered the storm. And then if you want to hold that trade overnight, then you've got a whole other options market that you can say, okay, I did pick the right area on an intermediate to long-term basis. I weathered the intraday noise. I bought the insurance. It worked out. And now I can readjust the whole thing with an actual long-term free trade, basically.
Yeah, because once you're in and you're past that point, you've trailed your stop, and now you don't even need a spread.
Yeah, and now you got to be looking at it like the so-called free trade, because if you can put the insurance plan on, and a lot of people don't understand. It's like everybody's got anything valuable has insurance on it. Why wouldn't they insure their account? You know what I mean?
Right, which is often more valuable than the cars they're driving.
Yeah.
Some of y'all out there more than the house you got.
Yeah, and has the ability to make a lot of money if you insure it properly. I mean, the house is in a static situation. The car, that's going to devalue, but you still got insurance on it. Your account, I mean, my God, I mean, why would you not do this? I mean, I'm actually kind of scratching my head right now why I did not know about everything you know already. This is so cool.
And one of the other benefits too is once you get up there is, like on your house insurance, using that example. As your house appreciates in value, you increase the coverage on it, right?
Yep.
Well, once you get in and you take off that stress of getting into a trade, but let's say you get a trade that's moving, and we've all had this where you're up $1,000, $2,000, $5,000, on a trade.
Yep.
And part of you is like, you can't believe you're up this much. Like, I can't believe I'm up $9,000 right now, et cetera.
Right.
And you're just like, should I just go ahead and take this, or what should I do? And what you can do, especially like news is about the Fed funds is tomorrow. Oh, man, I probably should just get out of this thing, Whereas you can go in and you can put this hedge on and still let it ride. But, hey, John, I appreciate you calling in, and we'll follow up, definitely. I know we already got my contact information over to you, and we'll follow up, and I look forward to it.
Cool, man. You too.
Hey, you have a great one, man.
Thank you.
All right, we'll be right back after this break with Austin from Orlando.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Alrighty, folks, we're going here to the Tommy O'Brien Show. I'm your host, Daryl Martin, and have a show, Diagnostic Trading Hour, every day from 1 to 2, and co-host with Tommy on Friday mornings from 10 to 11. And we got a caller in right now. We got Austin from Orlando. How you doing, Austin?
Hey, Austin. Or, hey, Daryl. I'm doing good. How are you?
I'm doing great, man.
Yeah, I just wanted to say that I'm a huge fan. I'm relatively new to trading, but I've been following you just about every day since February this year, and I can't tell you how much you've helped me along the way, man. You're very clear and detailed and concise in all of your explanations, and I just wanted to say that I really, really appreciate it.
Awesome. Thank you. I appreciate that, man.
That being said, earlier you were touching on how the Greeks affect binary pricing over on Nadex. And I've heard you explain that before, and it was super helpful, like when I'm going in and trying to make a decision on what type of trade or what strike I want to buy for whatever trade I'm putting on. So my question involves spread pricing. Now, spreads I haven't, played with a whole lot, but I want to. I see you putting on, the Google trade tomorrow and, other news announcements, the Iron Condors and putting on straddles and stuff like that. So I'm really interested in it. I want to get into it. So I'm curious, how much do the Greeks affect the spread pricing over on Nadex? Because before I just assumed that they were priced like, futures are priced.
Right.
So I was hoping you could shed some light on that.
Okay, well, the good news is that you don't have to worry about one of the Greeks at all, which is Rho, because there is no interest, okay?
Okay.
The other good news is most of the Greeks have a very small impact the closer you get to expiration, which makes it a lot easier, okay? You don't have to measure time decay so much as on when you're buying an option like a month out or a week out or, a few days out, because whatever the premium is, and I went over that if you watch some of my shows, I go in and I talk about the premium. That's the difference between where the spread is priced and where the future is priced. So let's say the spread is priced 10 ticks higher, okay? Then there's 10 ticks of premium in that spread. That is your theta. Like between now and the end of expiration, your theta is going to be 10, right? Because it's going to decay by 10 ticks. That'll go away if the market just stayed flat.
Yeah, but doesn't it go up though if they pump in more, implied volatility or whatever?
Well, the premium could go up. It wouldn't be the time decay. The time decay would actually increase a little bit if they pumped in more, because then it'd be say that became 15 pips of premium, then now your theta would become 15. But it's actually because that would be a different Greek, which is known as Vega. It's actually the only one that's not a Greek. It's a star constellation. But I don't know why they call it a Greek. But anyway, so the Vega, that's how much does implied volatility impact the price of the option. Okay. So normally you don't get a whole lot of implied volatility pumped in. That's usually going to happen right around news. So if a lot of implied volatility comes in, those things get really expensive. And I used to do a lot of straddles until I really figured out how they were pricing these. And they're pricing them it's just like a call or put Black-Scholes, option. If you understand that, great. If you don't, you don't have to. But basically what it means is when there's a large expected move, then the option is going to cost more money. Okay? If you're driving a car and and you're 16 years old and you've already had 2 tickets and 1 wreck, then your insurance is going to cost more money, right? So if you're 50 years old and you haven't had a wreck or a ticket in the last 20 years, and you live in a place that has 5 people in it, you're probably going to not pay very much. So depending upon how much expected volatility, how much expected danger is there in that that price changing, will cause it to cost more or less. So that's your Vega of your Greeks. So you got your theta, which is your time decay, and let's say Vega doesn't change, implied volatility doesn't change, then the time decay is still going to occur. Okay.
Okay.
So some people choose to make money on just time decay. That's what I'm talking about, premium collection, iron condors and butterflies, and I'll do just directional premium collection trades and things like that. I'm really doing a time decay. If I do it with news, and this is really only when I do it with news, I'm also using implied volatility. I'm using Vega because it's more expensive than it should be normally. And so I look at it and I'm like, wait a minute, the pound dollar usually only moves 60 pips at most on this announcement. Say NFP, okay? Right. And when the NFP, employment report comes out, we get say 60 pips of movement on pound dollar. But if I went in and I bought a straddle on this thing, if I bought the upper one and sold the lower one, it'd have to move 60 pips for me to be at break even. Because it costs 30 for the upper and 30 for the lower. So I'll just flip it around and go, you know what, they got this thing so overpriced right now that the probability really is in my favor just to go ahead and buy the lower one, sell the upper one, and I'll be collecting time decay on maybe a trade that I wouldn't normally go for time decay on, but since the Vega is so high, there's a lot more premium in there. Does that make sense? I know it's a whole lot of information in one big paragraph.
Yeah, no, I mean that makes sense. I was more interested in, I guess I probably didn't phrase the question properly, but how it moves. The speed of a binary moves faster the closer you are at, a 50 delta.
Yeah.
Okay. So the speed of the spread moving, I guess.
Okay. So speed is going to be 2 measurements. It's going to be delta and gamma. Okay. Right. So the higher your delta is, the faster it's going to move, because it's how much does the spread change in price for a 1-point move in the underlying. And it'd be the exact same as a call option with the same expiration and the same strike and at the same delta. So if your delta was at if your delta was at 90, then it's going to move 90 cents, and it's going to have that highest delta. It's a little bit unique on a spread. You'll get your highest delta right in the center. Okay? So right at the center part of the spread's going to move the fastest. But as it gets closer to the floor or closer to the ceiling, it's going to slow down.
Okay,
because that delta is going to approach 50 as it gets to the floor or ceiling, and it's going to approach 100 as it gets to the center. So ideally, I like to buy a spread that's like, say, around like 65 or 70 delta. You know, I mean, I'm not necessarily looking at the delta, but just one that's in like maybe the bottom 30% of the spread. Okay?
Right.
And because I know that, okay, I'm probably at about 70, but I'm going to go 70, 80, 90, 100, 90, 80, 70. So I got like this sort of this, what I call the gamma curve, where I know it's going to speed up and go faster in price change, and then it's going to max out, and then it's going to start slowing down a little bit. Because if I buy one that's all the way up at the ceiling, well, it's going to go like from 70 to 60 to 50. You know, and when I get outside this floor ceiling, now I'm going to have a delta of like 40, 30, 20, 10. You know, and I think the key question you're asking, which is what a lot of people experience when they don't quite understand how it moves, is they go in and they buy these really cheap spreads that are like out of the money. You know, like the floor is $10 above where the market's at, and the spread, they go in and they're like, man, this is great. I'm risking $5. I can make 300, and the market moves up like, you know, 20 ticks for them, and they only see that the spread's changed like 3 or 4 ticks in price after bid-ask spread.
Right.
And so you want to make sure you get inside. That's just like going in and buying a Google call that's way, way out of the money. But if you get in like close to the floor ceiling, depending on what direction you're going, and, you know, but not too close, so it's not too slow, and then it'll speed up for you. But great question. I'm glad you called in today, and you have a great day.
All right, you too. Take care.
Hey, thank you, man. Bye. We will see you tomorrow right here on the Tommy O'Brien Show and on the Diagnostic Trading Hour tomorrow at 1 o'clock.